Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So the market is open, and after market opening, we can see some sort of minor recovery on the chart of DXY and some sort of minor correction on the chart of gold. After the market opening, there is not much volatility in the market, so things are quite slow right now. If you have watched my previous videos, then my dear friends, the levels are still the same, nothing has changed. And my dear friends, if you're looking for detailed analysis, then please watch the video that I uploaded on Saturday, because I do not want to repeat the same stuff and bore you again. So let's get started. So DXY, yes, the most important resistance on the chart of DXY is still 107.70 to 108 level. So in case we see further recovery on the chart of DXY during the European session or US session, this will act as the next big resistance for the market, from where we can expect DXY to reverse. Right now DXY is standing at 106.71. More or less, this is just a minor recovery. It looks like a bearish flag also, okay, but still we have no clear picture on the chart of DXY. Just keep in mind, in case the selling pressure continues in the market, then the next support is 105 level. In my previous video, I have already shown why 105 is a very important level for the market. Okay, I'll paste down a link of the previous video in the description box so that you can have a detailed picture of the chart of gold. Now the chart of gold. So what should be a strategy then? See, again I'm saying, if you're positional trader, swing trader, then yes, there's a high chance then market will be testing the 1800 level. So you should be bullish, okay, if you are a swing trader, because the next big target for gold is around 1800 only. Okay, and in case if we see a sudden fall in the market, you can expect market to reverse from 1730 to 1735 level, because you can see the previous resistance 1730 to 35 was a very strong resistance for the market. We have already seen on a weekly chart also how strong the level was. So we can expect the market to take support around 1730 to 1735 next time. So this will be the next big support for us. But right now the chances of market coming down to this level, support level, is very less, okay, because right now market standing at 1765 and support is at 1735. It means that around 300 pips gap, so huge distance. Okay, so for swing traders, positional traders, those who have patience, these levels are good for them. But for day traders, these levels will not work, because it may take a couple of days, weeks, you never know. For day traders, I have used the 15 minutes time frame, and as I have already discussed in my previous video also, that for day traders, if market comes down in 1756 will be the most important support for day trading purpose. I have written 1956, sorry, okay, let me edit. $1756, $1746, these two are the important support for day traders. But keep in mind, these support levels are not very strong. These support levels are not very strong because right now the volatility of the market is not much. As a result, you can expect the market to bounce on 1756 and 1746 levels. See, volatility plays a big role in the market. Okay, you must understand one thing very well, that not all levels have the equal amount of strength. Some supports are weak, some supports are strong, some supports are very strong. 1620 is a very strong support, so you cannot compare 1620 with 1756. So 1756 will only work if the volatility of the market remains like this, and if you see market coming down to this level, and if you see market bouncing, you can go for a buy position. You can expect a profit of 30 to 40 pips. It means you can book your profit around 1760 level, and in case market breaks it, then the next support for day traders will be 1746-47 level. Okay, again you can expect a profit of 30 to 40 pips if market bounces. But again, I'll say keep in mind, in case market shows heavy selling pressure, let's say if you see these kind of candles, then the chance of working of this level is very, very less. Again, I'll say these levels are weak levels. Okay, how we have derived it? Okay, we have derived this level with the help of Fibonacci. Okay, with the help of Fibonacci only. There is no proper static support, there is no proper dynamic support also, just on the basis of Fibonacci, that too on a lower time frame. Okay, so not a very strong level. Hopefully you can understand. So please follow proper risk management. Do not gamble with your hard-earned money. And in case market shows good amount of buying power again, okay, let's say market shows a big green candle, then obviously you can go for a buy position also. You can consider a buy position above 1773 level, but keep in mind buying above 1773 can be risky. If you have been trading for a few months, then you know it very well that false breakouts are a bitter reality of the market. And I have already talked in many of my videos that yes, to save yourself from false breakout, buying and retracement or pullback is a much better option. But sometimes we don't get the opportunity. Market doesn't come for pullbacks. So in that case, if you see the market has crossed 1773 with a big green candle, then you can consider taking a buy position. But please follow strict risk management. Again, I'll say breakout trading can be dangerous because see, market manipulation, stop loss hunting are all bitter realities of the market. Okay, as a retail trader, your first priority should be capital protection. The main reason why retail traders lose money in the market is that we retail traders mostly focus on a profit part. Whenever we look at a chart, okay, we simply think of, okay, if I take a buy position, I can get this much profit. Okay, we hardly think about the loss. And the main difference between a professional trader and a retail trader is that professional traders determine the loss from before only. Okay, because the only thing a trader can control is the loss. You can only expect profit. Okay, whenever we take a position, whether buy or sell, we can simply expect to make money in the market. Is it in a hand? Can you draw the chart? No, it's not in a hand. The only thing a trader can control is the loss. Okay, so if you can control a loss, okay, if you follow proper risk management, okay, then nobody can stop you. You will be unstoppable in the market. Okay, and the secret key to a successful trading career is emotional discipline, overall discipline, because it's the overall discipline that makes a trader profitable. Anyways, I'll be talking this stuff in some other video. Anyways, all the best. Bye bye, take care.